Hello and welcome to Macros with Mythili, the ET Now show that takes a hard look at all the major developments in macroeconomics, both in India as well as overseas. In this edition, we're going to take a hard look at an issue that really defies simple solutions: protecting the digital financial space. Earlier this month, the Reserve Bank of India's monetary policy statement made two key announcements to fortify the digital financial economy. One, localization of all payments data, and the other, prohibiting RBI regulated entities from having any dealings with entities dealing with virtual currencies. Effectively banning virtual currencies, say many virtual currency zealots, though why they want a link with the very antithesis of the virtual currency world, central bank issued currency, beats many others, including me. In this edition, we are going to try and make sense of it all and look at both these announcements to understand their implications. And helping me do that are three experts in the digital space: Naveen Surya, Chairman, Payments Council of India, who also headed a digital payments company earlier; Gangesh Verma, consultant at the Delhi-based think tank ICRIER; and Manish Kumar, co-founder Grex and RealX, companies that are providing innovative financial solutions that combine high finance with high technology. Welcome to the show, Naveen, Gangesh, Manish. Let me start with the first announcement of the Reserve Bank of India: the RBI's demand for unfettered access to payment systems data for what it calls supervisory purposes, and hence its directive that all such data must be stored only inside the country. How valid is this demand, and does the place where the data is stored make a difference as far as access is concerned, and that too in a digital age? Let me start with you, Gangesh.
Thanks, Mythili. So, the thing is, I think one needs to understand that location of the data does not really determine access. As we can see in this digital age, data is going to be stored across the world, and until and unless we have a supporting legal framework, whether it's for specific access to the data or even processing and regulating these entities. So, for example, the US, there was a famous case where Microsoft and the United States were trying to access data. Now, in that situation, the Cloud Act needed to come into force before the issue became moot. So similarly, until and unless we have similar regulations through the data protection committee, the expert committee that's coming up, if we do not have a supporting legal framework, simply locating the data within a country's jurisdiction is not very useful. Especially one where we have a democratic system and a legal system, unlike, say, probably different countries that have other coercive measures.
Okay. Do you agree with that view, Manish? Because the RBI's rationale really is that this will ensure safety and security of financial data and reduce, if not completely eliminate, data breaches. But as we have seen recently in the context of Facebook, there is no such thing as an impregnable fortress when it comes to data. Zuckerberg's own data was compromised, so we must learn to live with the fact that data breaches are inevitable, and we can at best reduce the incidence and unearth instances of breach as far as possible. So this insistence on localization, how relevant is it, Manish?
So the answer to your question from my angle, works both sides. So I'll give you pointers from both the sides. So from RBI side, they did not enunciate the real challenges that they faced while accessing some of this data. So there are definitely questions that are being raised on why would you want such a move at all. But from the payment provider side, I don't really see that being a real challenge to keep data in India. That's not really a challenge. You have even Amazon servers which you can provision to be in India. So that from let's say if I were a payment provider, I don't see that to be a real challenge. However, there is a clause, there is a word that RBI put in that data should be resident only in India. That might have a corresponding challenge with maybe a regulator tomorrow from elsewhere, because we are talking about payment from a bank which may be resident somewhere else and a resident who may be somewhere else physically using the system somewhere else in some other country, etc. Now, so that may be a tricky issue, but they are talking about payment data residing only in India, which I think may lead to some use cases which will solve over a period of time. But per se, RBI requesting that in the interest of its own citizens, I don't think that poses a real challenge to payment companies, broadly speaking.
So Naveen, I think Manish thinks this is not a major issue, but as someone who has perhaps worked with the RBI officials in the early days of the digital payment systems, do you agree? Is there really an advantage in forced localization because this is compulsion, or does it only increase the costs with no commensurate benefits? The word I'm using is commensurate benefits. Naveen?
Well, Mythili, I think as Manish and Vignesh both put certain points, I don't disagree with their points. In fact, we have to see this is an entire financial systems regulated by RBI, which includes NBFCs, which includes banks, which includes payments companies. And looking at certain serious issues that have been dealt with along with the government and RBI earlier, whether they call investigation, suspicion transactions, preventing some major failures or issues or preventing them, I think there has been challenges in past at certain stages where the data wasn't available or the access wasn't easily available. So some of these moves are fairly global, and most countries today in regulated space do demand that data of the transaction and the consumers who are resident of that country has to be available anytime clearly for those government and regulators to look at it. So per se, even I don't think this particular view is a specific challenge. But again, let me comment it by saying that this is more of an individual view, not a PCI view as yet. So this is the first part, and as Manish highlighted, in this whole scheme of things, the problem is only with the word only in India. So there are multiple exceptions to that only, and I can quote very quickly two such exceptions. One, let's say an Indian residents and goes and does a payment transaction in any other geography, where the merchant is obviously likely to be an international or a foreign one. Basis the local laws of that particular geography, the data will have to be also be in that country for that consumer and for that merchant. So the current notification does point out that some part of our data can be there here. I think it will lead more discussion, more clarification. Because such cases, even India would want every foreign customer or consumer visiting India to have their data in India about whatever they do in India. Similarly, the bigger issue you talked about, cost versus commensurate benefit. I think that's applicable mostly from a scalability, disaster recovery system perspective. So I also agree that we need to have a system and a flexibility in place where basis entity size, in case they want to go beyond India and take advantage of best technologies, be it cloud, and in future it could be something else. And for that reason, if the data needs to be in additional servers, probably we could look at that and allow it as long as these entities are responsible and they take care of the right norms in terms of privacy and security of data, which they do today also. So Russia as a country has been always quoted as one of the best examples, where the general view was that they insist that you have to have one copy of the data always in the country. All related access should always be available to the regulator. However, after that, everything else is fairly flexible as long as the framework of the regulation is managed by those entities.
So it's very seldom that we hear Russia being quoted as an example, but here we have one certainly in the case of what Naveen says. But you know, Gangesh, Naveen spoke about access and localization. Are these two mutually exclusive? And the RBI in fact has set out a 6-month timeline for compliance by all payment system operators. Within this time, it wants all data to be localized. Is this time frame reasonable, particularly if, as Naveen says, there really should not be any contradiction between access and the localization? Gangesh?
Yeah. Before I answer the question, I just want to quickly add to the idea about the requirement of only in India. I think the subsequent instructions that the RBI came up with specifies that where there is a data that's, where it's required to have a foreign copy of the data outside the country, that may exist, but which also means that you would have to create a similar copy in India. So I think that might provide some sort of an answer to the question of storing data only in India. But I'm afraid that the instructions are not very clear on further details. And to go back to the question about whether access and localization are on the same, the thing is, like I mentioned earlier, to have access, what you need is a legal framework that provides that. And until and unless we have, that legal framework, especially generally on data, which the expert committee led by Justice Sri Krishna is working on it. Until and unless we have that, creating norms to have access towards particular set of data is what you need to look at. And simply requiring the data to be stored in the country does not provide us access.
Manish, Gangesh is a very relevant point. Are laws really the answer? Because more than localization, is it the supporting legal framework for data disclosure that we really want? And the Sri Krishna Committee on Data Protection and Privacy is expected to submit its report shortly. What should we expect? What can we expect from the committee? Very briefly.
So, I think what RBI has done is, singled out payment systems, as one entity. I think this needs a wider debate about how do we want to do, regulatory access to, any, financial system data, and how does India govern data in some sense. So, and everything, all the regulations, all the instructions should follow that principle. So the debate is wide open, and I think there are many angles to it, and the Aadhaar issue is one of them, which is pointing out into many specifics of the data storage, use, authority, local storage, scrapping, deleting, etc. So all of these actually needs to be holistically discussed, whether we are talking financial or not, and maybe some additional financial measures which probably the regulators together can come up with, and every entity should know that this is what you have to simply comply with, and I think we are kind of done there.
Moving from law to practice, does the RBI's demand for localization end up favoring some payment system operators and their outsourcing partners that are already storing their data within India, and in the process, in fact, the playing field has been skewed against other players? So in practice, does it tantamount to that?
Well, Mythili, I don't think so. I think let's look at it this way. If we understand technology, payment transaction needs the maximum speed and least latency, right? So by virtue of that, most of the transactions are always processed locally and always, let's say, have something which is locally available. So irrespective of size, most entities today have systems and data available in India. And as I said, we are already talking about legal framework somewhere where, and probably partly this has also come because of the whatever happened in Aadhaar, where we tried to become, let's say, too fast, sub-AUAs were allowed, and there are a lot of too much of a proliferation, the data were lying all over. So I think somewhere the framework is getting created where the data is available here when required. There are some, as I said, I can't go on details about certain serious reasons why you need data access real time. We can't go dwell into it. Some of those issues might be related to national security. So considering those experience, I don't think there are too much of issues with that. I think any sizable entity doing, and again let me repeat, it's not just payment, there's also financial services regulated by RBI. So all of them have the data here. I think the issue, again, as I said, and we were all saying that there is additional work that needs to be done. There is additional clarifications that need to come. There are additional work around data security laws, data privacy law. There are work around what happens in those exceptions when the transaction data can be beyond India and it is not only in India. So those are open questions. I'm sure RBI, like in past, will continue to be open to discuss with the industry those issues, and we'll get there, find the right answers.
Well, I hope you're right, because when it comes to the virtual space, there are many things that are yet to be defined. But I'm afraid it's time for us to slip into a very short break. Please do stay with us. We'll be back very soon. Welcome back. You're watching Macros with Mythili, and I'm in discussion with three experts on a very critical issue in today's world: protecting financial data privacy, security, safety. Gangesh, the RBI's detailed circular that followed did not have too many details. Thus, for instance, there's no clarity whether banks or payment applications using the NPCI and UPI interfaces like mobile banking applications are covered. What is your view? Should these also be covered, and how much of a hindrance will that be?
Yeah, so you rightly pointed out the detailed instructions are not very detailed. But I think it does mention about third-party vendors and other ones who are riding on one particular layer. While that's interesting, but it's just that there's no clarity on where that boundary stops. So whether mobile banking applications are included, whether wallets that operate purely on as a UPI licensee will also come under the ambit of this regulation. And the other thing is, if they are not included, then what's the purpose of specifically only this set of payment system operators? Why not all other digital financial entities that operate in India's digital finance economy? Singling out PSOs that are listed, there are about over 80 entities that are listed by RBI as of April 2018, and if if the other entities are not included, it doesn't make much sense to really have this kind of a regulation.
Oh, yes.
Probably some more clarification on it might help.
Oh yes, but this is an area where I think there's a lot of clarity that is yet required by the world at large. But Manish, would you agree that apart from increasing costs, is there a likelihood that such a demand will result in a tit for tat with other countries insisting on similar localization? So does the world as a large benefit from the process, or is inter-country cooperation the better answer? Manish?
I think so one is that there would be demand from other countries as well. Yes, maybe RBI is one of the first ones to kickstart that. But if this is an idea that RBI has shared with the world is going to, at least a part of the world will follow. Which is why when I began, I pointed out the only word as being a challenge, because there would be other regulators also wanting part of the transaction if it happened at their end to be with them. So that probably is getting resolved as we go by. Per se, data, the amount of data that we are talking about really doesn't add too much of cost, because the transaction data is very small, and anyway it is prudential for the companies to maintain that data backup as a business continuity measure anyway. So that itself is not really a challenge, as much as probably any other regulation that may have been business wise harmful to companies that would have come up. So when we work in this sector, we really are looking for something that can harm your business. This additional storage of data comes with being in the fact that you are in a regulated industry. So this is okay as far as the cost of data storage really goes. But specific details would really help on how much data, how long a period, etc., etc.
The virtual world is really, frankly, the very antithesis of regulation, which is why this entire issue arises, that how much do you need backup, where do you need backup. In fact, Naveen, if you were a votary of RBI's regulation, you saw some logic to it, fair enough. But not so long ago, Apple in fact refused to cooperate with the US government to unlock an iPhone that was used by one of the two shooters in the San Bernardino attack on the grounds of defense of civil liberties and data security of hundreds of millions of perfectly law-abiding people. And the FBI finally had to pay close to 1 million, it is reported, to a third-party company to help it bypass that specific device's encryption. So even if the servers are located in India, what is the guarantee that the service provider will give you access? Is physical location so important to access, Naveen?
So Mythili, I think legal position about all the regulated entities is already very clear. RBI has a complete say in every entity which is regulated. They have full control over whatever they want from those entities. So I don't think it's a legal question, it is already an empowerment given by the parliament to the RBI in all the entities and businesses they regulated. And I would also clarify what Gugni said, that why it is applicable only to certain type of entities. Actually, it's a design. It's not that it is applicable only to certain entities. RBI always write to the entities they directly regulate. And most of the systems which are subset of the system, let's take a UPI white label applications of third parties. They are regulated and they are covered and under partnerships of those banks. So it is assumed under the regulation, or rather directed and expected, that the entity partners who are regulated, they will bring this law and enforcement on those entities, otherwise they are accountable and answerable. So it's an indirect regulation, but because they don't govern those entities which are outside, let's say, licensed regime of RBI, they would not write to them directly, but it is expected. Take an example, merchant aggregator for an example. Each one of them are connected through a bank. It's a bank who's supposed to enforce this on them. So legal position in India about regulated world is already clear. I think what we're talking about is a generic internet environment. Let's say if this was to be applicable to Google or Facebook or any such entities, probably we don't have a law, we don't have a clarity, and that is what happened even in US. The whole debate with Facebook today is that the appropriate law does not exist to control those entities and those breaches. So they're trying to discover what law and regulations is required in a social environment. But the activities of commerce, banking, payments, these are very fairly detailed, clearly regulated and already empowered about whatever is required to be done by these entities, and the necessary powers are already with RBI.
True, but the fact is that when it comes to payments and money, there's a thin divide between what is regulated and what is not regulated. And there are a lot of companies seeking to make money by riding on that thin divide, which is very difficult to really define. But Gangesh, if I can shift now to virtual currencies, the fact is that Bitcoin, which is the best of the thousands of digital currencies that have been developed, gained in value by more than 900% last year to hit almost 20,000 a unit before Christmas, but has since crashed to less than half. So should central banks worry or shrug their shoulders on the grounds that if you play with fire, you're bound to get hurt sometime or the other, and it's not the central bank's responsibility? So should the RBI worry at all about it, and should they come out with these strictures saying that you cannot have any regulated entity cannot have anything to do with another regulated entity if it has any dealings whatsoever in the virtual currency space? Gangesh?
Well, frankly, I think it does certainly require a form of understanding and regulating because of how volatile the space is. But coming out with a regulation that effectively bans it is counterproductive, especially when that entire sector of virtual currencies and cryptocurrencies are at such a nascent and growing stage, and where regulators across the world are looking at more nuanced approach to understanding that space. I think it would be counterproductive to completely ban that virtual currencies.
Manish, would you agree with Gangesh? Because even while coming down virtually on virtual currencies, the Reserve Bank itself is examining the desirability and feasibility of introducing a central bank digital currency. So is there a contradiction in this? You're talking about a virtual currency, but you're talking about one that is backed by a central bank. Manish?
Yeah. So there are two views that I'll share here. One of them would be the fact that the challenge that we face, and I'm extending this discussion beyond Bitcoin, which obviously had a lot of speculative angle to it, so it kind of takes the whole debate somewhere else, where while we are talking about cryptocurrency as a technology, as a solution per se. Now let's look at what really happened with this, and crypto exchanges in particular I will talk about. Now first thing is, nobody really examined that how can you set up an exchange in India. When we set up, and I give you examples from my this thing, we set up Grex as a private placement platform, and we just called it exchange like, just to exuber the fact that it has governance, it has it's a structured market. A lot of things we have learned from the exchanges. We ourselves submitted to the regulator, which is SEBI, and we have taken 2 years to convince SEBI and their legal departments, various departments, for them to understand what we are doing, and it is not a fly-by-night thing. It complies with law, etc., etc. I have personally been a very strong I have professed always that you can't create stable, structured financial intermediaries or capital market intermediaries without the confidence of the regulator. Now the word that I choose is confidence, is because sometimes the law, especially when you are talking about innovative solutions, may still be catching up, but there are regulators in both the spaces. Coming back to the cryptocurrency world, now the contention that they played out was, we are sometimes not a currency, we are sometimes not a security, we are sometimes not a commodity. Now you've got to be either of these, and nobody was talking about anything else apart from these three. All these three have licenses being issued by SEBI. Why would you not go and talk to the regulator first, and have so much money being put at risk? That is one point. The second point is, how did the banks etc. allow them to operate? Which bank account was open for them? There are designated bank accounts, there are designated methods in which the capital market works. Which bank account was open to them? Now these are questions pertinent, which basically says that we allowed some things, whether covert or overt, and suddenly pulled them back. Now one, allowing this way, or these guys really going ahead in the market without taking consent or confidence, was one part probably not right, and not rightly done. Another part was suddenly pulling them back from probably choking their bank accounts, etc. The regulator could have given more space, could have given more time for them to interact.
We're running out of time, and I'd very quickly like to get Naveen also into this. Naveen, very quickly, can you tell me, do you agree with Manish on this? Very quickly, please.
Well, I think he has a point here, but I would just clarify that RBI has not banned it. It's like a non-corporation. Ideally, it's a government's role in this particular situation to decide whether they want the system to exist or not.
The RBI doesn't cooperate, then you're in trouble.
So that's the problem. So it's like a indirect, or I mean, sorry to use this term,
Yes.
but
I'm
it's
afraid
more like below the belt, to be honest.
Okay, below the belt from the central bank. Yeah. That's interesting, but I'm afraid we've run out of time completely. So we'll have to end this very interesting discussion now. Clearly, when it comes to the world of digital finance, the jury is still out on a host of issues. How to ensure it does not endanger financial stability, ensure the data is protected, is not misused, and so on. The good thing, however, is that now that we've got the debate going, we will find the answers one day, eventually. Of course, after some hits and misses. Thank you so much, Gangesh, Manish and Naveen for joining me in this very interesting discussion. Thank you also for watching. Remember, we'll be back next week with yet another edition of Macros with Mythili. Till then, it's goodbye and thank you from all of us at TT Now.